Ray Dalio warns the world is on the brink of a capital war. This is not a normal market warning, because Ray Dalio says the global system is reaching a dangerous financial turning point. That means governments competing to protect their money, their currencies, and their financial power. When uncertainty rises across the global economy, Ray Dalio says most people focus on the wrong question entirely. Dalio urged central banks and sovereign wealth funds to stop debating gold and start thinking seriously about allocation. In his view, gold remains the best place to store money when trust in currencies and financial systems begins to weaken. But while investors focus on storing value, companies using precious metals are facing growing cost pressure. And that pressure has already forced one major global brand to make a strategic shift. Tech giants are about to spend an eye-watering amount on AI. And Wall Street is starting to worry. We're talking about the biggest capital spending surge the tech sector has ever seen, all driven by AI. That level of capex means massive pressure on free cash flow, even for the strongest balance sheets. Amazon is now projected to see free cash flow turn negative this year. Investors are asking whether AI dominance is worth the short-term financial pain. Because when cash dries up, valuations and stock buybacks come under serious pressure. And that risk appetite is about to be tested again because crypto just delivered a wild reversal. Bitcoin just pulled off a sharp comeback after nearly falling off a psychological cliff only one day after threatening to break below $60,000. Bitcoin surged higher. The move shocked short-term traders who are positioning for deeper downside. Still, some analysts warn this rebound may not be the final bottom. Bitcoin could still slide toward the $50,000 range. And while crypto whipsaws, traditional safe havens are quietly making a move of their own. As risk assets swung violently, gold quietly reminded investors why it remains a trusted store of value during uncertainty. Gold rebounded on Friday and was set for a weekly gain after suffering losses earlier in the week. Lingering concerns around U.S. and Iran negotiations in Oman also helped lift safe haven demand. Together, these moves suggest investors are slowly rebuilding defensive positions amid growing uncertainty. But the biggest market signal right now isn't coming from metals or crypto. It's coming from U.S. At this moment, the Dow Jones is acting like a real-time scoreboard for Federal Reserve expectations. Markets are reacting to whether interest rates stay higher for longer or finally begin to ease. When Treasury yields cool or stabilize, downside pressure on the Dow begins to fade. Many traders now track the 10-year yield chart alongside Dow futures throughout the trading day, because the next Fed signal could decide whether this market is a hidden trap or a once-in-a-decade opportunity.